Cash flow. That's the biggest problem that most business owners face in their day-to-day lives. It creates the most amount of stress, it creates the most amount of angst, but it also creates that feeling of when it's perfect and when it's going well, your business is going to feel like it's humming and nothing better. My name is Scott Peper. I'm the co-founder and CEO of Mobilization Funding. And today I got my whiteboard out, I got my marker, and we're going to talk cash flow. I'm going to use some diagrams, I'm changing up the scene, and I want to give everybody a different perspective of where cash flow is, how it creates problems, what it isn't exactly, what it is not exactly, how you can fix it, how you can create the problems yourself, short-term, long-term, all the answers I'm going to try to give you as quick and concise of the facts as I can. So hang with me and let's roll. First and foremost, let's talk about what cash flow is. We have lots of different questions all the time in our business on what's the difference between cash flow and profit. What exactly does cash flow mean to me in my business? How do I create problems? How do I fix problems? So let's go through that real quick. First and foremost, cash flow is as simple as if you take your business right here, and this is your business, you have the flow of cash, which is going to be sources, and then you have the flow out of cash, which is going to be called your uses. Okay? Now, simple sources of cash, most common is your accounts receivable. It could be lines of credit. It can be investor cash. This is maybe equity that you've put in. Maybe you raise equity. You're doing, depending on your business, you bring in an investor, they put cash into the business. There's lots of different sources of cash that can come in and out of your business. But sources of cash does not mean revenue all the time. It just means sources of cash. That's it. Some can be revenue to your business, like accounts receivable, but some might just be debt or some other types of lines of credit or short-term debt, long-term debt, or equity. Okay? Your uses of cash, though, this is going to be typically all of your business expenses. And on those business expenses, you're going to have your cost of goods sold, which if you sell products or services, this is going to be things that the hard costs, these fixed costs, those material costs, not necessarily labor, but it could be. And now you got your labor is going to be its own. You have your subcontract labor or vendors, and then you also have good old overhead. And overhead are going to be your fixed debt service payments, your utilities, the things that are not related to a specific job or directly related to a specific customer. Now, what is cash flow? Cash flow is essentially the relationship and timing between your sources of cash and when you have to actually use that cash. I hope that makes sense. I'm going to say that again. Cash flow is essentially the relationship between the sources of cash you have, and of course the amount, and the uses of cash you have, and most importantly, the timing of each. When is this source going to come in? When is that money going to go out? If this money came in and money went out in the exact time that you need it, then guess what? You don't have a cash flow problem. But that's why we talk about cash flow. Now, let's dive into a couple other things about how cash flow feels inside the business and what you can do about it. Now that we understand cash flow, let's talk about how do we measure cash flow? How do I know where my cash is or not at any given time? I'm going to give you guys a really big hint right now. It is not by looking in your bank statement. That is the worst way to manage your cash. It's one way, but it's not the best way, because all it's going to do is give you a snapshot in time. So let's look at it real quick. All right. A cash flow statement is a financial statement, one of the big three, that will give you an idea of exactly what we talked about a second ago, which is the sources of your cash, the uses of your cash over whatever specific period of time, And then you can see, did the business generate cash or did it reduce the cash for that period of time, typically on a monthly basis. And again, the creation of cash or the reduction in cash does not have anything to do with your profitability. It has to do with the amount of revenue you've collected. It might have to do with the amount of debt service you had, if you closed on a new loan, and the expenses going out, timing of payments, but it is your cash flow, the amount of cash you create in any given period of time is not your profit. Those are two different things. We'll talk about that in a second. But a cash flow statement is going to do exactly that. It's going to measure your sources of cash and your uses of cash over a period of time. Typically, if you're looking at a cash flow statement, you typically are going to get these with your monthly financials, so you're looking at it over the course of a month. But it can be quarterly, it can be yearly, it can be whatever. Okay, so if we're looking at that on a given period, let me show you what that looks like. Let's say that your accounts receivable report, okay, your AR report, says you have $1.2 million owed to you. Some of this $1 million is owed within 30 days. Some of it might be at 60, 90, etc. Okay, typical AR report. Then you also have an accounts payable report. This is what's due 30, 60, 90 days, okay? These two AR and AP reports are gonna have a direct impact on your cash flow because the money you receive and when you receive it and the money you need to pay to your vendors and when you need to pay it have a direct correlation to the amount of cash you're gonna use, create, or need, okay? Now, the other big expense that a company has is its labor. You're going to pay this typically on a weekly basis or bi-weekly basis, depending on what you're looking at. So these are the typical uses of cash, and this is going to be one of your major sources of cash. Your other source of cash, as we talked about, might be a line of credit, which means you have access to use that cash, or other loans, or equity cash that you've put into the business. Okay, now, what's important to look at when you're trying to measure cash and these different options for yourself is you want to be able to see what does that look like on any given period of time and how can I forecast it out. So, the easiest way to do that is by working on what's called like a 13-week cash flow or a cash flow statement or working cash flow, okay? What you're going to do is you're going to take typically you'll see in a spreadsheet, or you can take any type of template. If you just Google cash flow templates or look in Excel, look at Word, or call a friend, whatever you do, get a cash flow tracker. Top of it is typically how much cash do you have on hand now? What are your sources of cash? And it'll list them out, and then it'll list the potential amounts that are coming in. Okay? And then you're going to have your uses of cash. And it will also list your vendors, payments, everything. Now, the next piece you'll have is time. And let's just say each one of these columns is a week. So today is, as we're filming this video, this is December 1st. So December 8th, December 15th, and so forth, all the way on. What you're trying to do is forecast where your cash is at. So if your cash right now, let's just say you have $100,000, you want to know of the vendors and the payroll and the labor and items you have, and you can put your own line item in here for labor. And let's say you just have, for easy and simplicity's sake, let's just say your labor costs $10,000 a week. Everybody's on salary, there's no changes. For simplicity purposes of this sheet, let's just pretend that's the case, even though I know it's not. But you can forecast what your labor is going to be depending on your business. You now have your sources of cash, which is going to be your accounts receivable. You'd want to list out each one of your customers or projects, estimate how much you anticipate receiving, where in the next 13 weeks you expect to receive that money, and you do that for each and every individual customer or project. You then do the same. So this is basically your sources side. This is the side that's going to add cash to the equation. Labor and expense side, this is the side that's going to basically reduce your cash, okay? And so at the bottom, you're going to have total cash remaining for any given period. In this case, the periods are 1 week at a time. And what you're trying to do is you want to forecast out what your next 1, 2, 3 months are going to look like. When you're sitting here right now with $200,000 in cash, you want to know how long is this cash going to get me? Maybe you have $0 coming in the next 2 weeks, and you have a total of $60,000 plus your labor that needs to go out the next 2 weeks. Well, you know that $140,000 of this cash, 10,000 plus 60,000 is 70,000. 70 plus 70 is 140. You know that $140,000 of cash is going to be used in the next 2 weeks. So really, your free cash flow right now at the end of this week with future expenses might only end up being $60,000, 200 minus the 140. Now, what you're going to do next is you repeat this process all the way out for 13 weeks. The farther you get down the 13-week model, the more forecasting you're doing, okay? Yes, that means you have to try to predict what you're going to invoice for each job, each month, when it'll be paid, when you'll receive it. That's why your AR report, your AP report, your labor expenses, and your fixed overhead costs are going to be critical for you to know and understand in order for you to build this 13-week cash flow. And that's exactly what this is. In this particular case, you drop the statement and you live and work off of this 13-week cash flow that you're going to build out. There's plenty of templates out there for you to use these that are very easy to see and manipulate and utilize. We have some on our website. We can get you access to some if you have different ones. But if you do a simple Google search, you're going to be able to find some cash flow statements that you could probably use pretty easily for your business. That is the basics of a cash flow statement. And this is a 13-week cash flow. Now, before we move on, I want to point out one thing. So, if you're living through this 13-week cash flow, you can now see and estimate when money is flowing into your business from your different sources. And you know how it's flowing out based on all your vendors and labor or payroll. You now are seeing your opening cash balance at the top every week. You know what money might be coming in, and you know what money might be going out. And then at the end, you're going to have a new cash balance at the end of that week, which then comes up to the top of the following week. This will give you the flexibility to know how to use the cash that's in your bank statement at any given period of time. Instead of when a bunch of money comes in, you just hammer it down to zero. Or instead of when money comes in, you spend too much on this and then you're stuck the very next week. This is how you can forecast out and call a vendor and say, you know what? I know I owe you $60,000, but I have $20,000 I can give you right now, and I can give you the other $40,000 over here in 2 or 3 weeks. And you know that because you could see it now in one uniform report. That's the benefit of understanding these two reports and how you can use them in your business. All right, now we've gone through the basics, but I want to drill down on 2 key things that are going to really, really help you in trying to work through both the cash flow statement and, most importantly, the 13-week cash flow. If you're a business owner watching this, what you're going to live off of is your 13-week cash flow. If you are in accounting or you're working with your CFO or your CPA or whoever does your financials, they can run a cash flow statement for you very easily just off of your normal business transactions and keep a track of that. Well, what you really want to use right now is this 13-week cash flow. And what I want to dive into for you is to explain a little bit about forecasting and how you can be successful with it. Here's the key. Let's do it one step at a time. Let's take the top portion of that 13-week cash flow, which is your sources of cash, okay? And for the moment, let's just pretend that your only sources of cash are your accounts receivable, the customers who owe you money, okay? We're going to call that AR, accounts receivable. Now, Here, you have your total AR, and then what I want you to do is list every customer who owes you money. If you're in construction, you could do this by project, okay? Because you might have multiple customers, and you'd rather track this by project than you would if you have 3 projects with the same customer, okay? So now you have each of these are a project or a customer. Doesn't matter, just separate them this way. Now, when you're looking at week 1, week 2, and actually we're not doing weeks here, they are by weeks, but let's just pick the date. So it's the week of 12/1 or the week of 12/8 or the week of 12/15 and so forth, okay? You want to take this project and say, oh, I'm owed $100,000. I think that $100,000 on project 1 is going to come in the week of 12/8. Project 2, that's going to come in the week of 12/15. Project 3, that's actually due next week, okay? And you do this all the way through. So as if you're looking at, if this is an Excel file and you could see the spreadsheet, you'll see exactly how these map out. And you just start with your AR to make this as easy and as simple as possible for you to map out. And when you're mapping this out, you don't want to be aggressive with it. You want to be conservative with it. And why? Because you want to know in the most conservative manner if this money comes in, where you're going to be. If it comes in sooner, that means everything you plan for only gets better. If it comes in later, it means everything you plan for is only going to get harder. So you're a lot better off building a conservative model. Okay, so this is what I would do for the sources and your accounts receivable. List them by customer or by project, map out when they're going to be due, pencil it into the project. Now, if this is supposed to be a 13-week cash flow, and I only have 3 weeks showing, I can hear someone saying, well, great idea, Scott, but okay, what am I going to put for December invoices for project 1? Sure, this $100,000 here, this is what I invoiced in October, and I'm now being paid in December. But my November invoice was $110,000. Where am I going to put that? Okay, great. Well, then you map that out and say, okay, well, if you're receiving this around October 8th, your end of November invoice is probably going to be due around January 8th or January 15th. So you go out to here, and under the week 115 for your invoice, you're going to put your $120,000 there. 4, 5, 6 weeks later. And you just repeat this process all the way out. So here, you know this is an actual number because you already invoiced it. You know this is an actual number. As soon as you invoice November, you're mapping it out to January. But December, you haven't finished yet, so you have to estimate what that's going to be. And so you're going to forecast, I think we're going to invoice, call it $120,000 again. And you'll take that forecast and you'll push it all the way out till February. Now you're in your 13, 14 weeks out, 12, 13 weeks out. And you're going to repeat that process for every portion of your AR. All right, I hope that makes sense. Now next, we're going to do the same exact thing for your uses of cash. And this gets a little bit easier sometimes because you have a lot of expenses that you don't have to forecast. Now these are going to be basically all of your expenses. This is going to be where your cash has to go. Okay, so let's start with overhead costs because this is easy. So you're going to put out here your overhead costs. You're going to put your fixed labor. This will be like all salaries and things like that that are not attributable to specific projects. You're going to put your utilities, rent, or maybe it's a mortgage. You're going to put your debt service payments. This might be for vehicles, trucks, equipment. You're going to put your insurance costs. List out all these fixed expenses here that you're going to have that are consistent, that you know that they are basically either weekly or monthly, okay? And you put each of those numbers in month after month all the way through the entire 13 weeks, every single week. once you've done your overhead and fixed expenses at the bottom, or next as you're just going down the line, okay, now you want to put in your project payments, okay? These are the vendors that are going to be owed money. These are things that are variable expenses that will change. For example, this is going to be material on jobs. This is going to be subcontract labor. These might be equipment rental, for example. This might be a bonding payment, not regular insurance, but it might be a bonding premium payment for a new job that's coming out. Again, these are all things that are going to be variable. So these spreadsheets in the rows you use can be very long. They can get lengthy, but you want to do it as detailed as possible because you want to see where each one of your payments or your uses of cash are going to go. And so this is how you build that 13-week cash flow and make sure you capture everything. And then again, at the bottom, you're going to have all your sources of cash, a total, all your uses of cash, a total, and then that's going to give you your net cash available. All right, now, what we're going to talk about next is, this sounds great. I can fill all this out. Then I have a giant negative number at the bottom of these weeks, particularly when I start jobs. Or I have this negative number altogether. What do I do, and what does that mean? Perfect question. We talked about the sources. We talked about the uses. And let's just say, for example, you have these listed out, right? They're in rows. We got these pretty columns we talked about before. And let's just say at the end of it all, you have more uses of cash than you do sources of cash or cash on hand, okay? This is your normal cash on hand. And this number down here is negative. What do you do? That's where your other sources of cash may come into play. This is where debt service is going to be. This is where you might be able to make a decision if you're looking out 13 weeks and you see that this particular week is a negative number, but this particular week has a huge cash surplus. Let's say this is negative $25,000 and this is positive $50,000. What you're going to do is look at these uses of cash and determine which of these costs can be moved over to this week. And if you can find $25,000 that can be moved over to this week, then you move it. You scratch this out, put a 0 in there, and move it to this week and use it. And then you'll see how this will flow the entire rest of the 13 weeks, depending on how all of this information flows back and forth. But what it does as a business owner is gives you a chance to look at one thing in one spot with your team and make decisions. It also gives you the chance to say, oh, this project's about to start. I want to order the material in advance because it has a long lead time. If I go ahead and order that material right now, am I going to be, what's going to happen? If we have 200 grand here, for example. If I use that 200 grand, I get a 10% discount. I could save 20,000 bucks. Let's use it. Okay. You map that out, spend the 200 grand here and see what it's going to do out here. If that using that 200 grand creates a bunch of negative weeks and you don't have any solution for it, there's no extra lines of credit, there's no debt service you can use, or not debt service, there's no additional debt, or there's no additional cash you can put into the business, well, it becomes easy. Despite being able to save 20 grand on the material, it's not a good use of your cash. Does that make sense? I hope so. Because if you use that cash correctly, then you'll understand. Now, let me show you what this can be. If you have a line of credit available, and your available line of credit has $200,000 on it, and you can save 20 grand by ordering that material in advance, and you can use this 200 to pay for that material, that's great. Then all you have to do is figure out what's the debt service payment going to be for that 200,000 across the spectrum of the next 13 weeks or monthly. And then you can fill in this payment, but you now have an additional 200,000 in cash. And then you figure out when you're going to pay this line of credit back from whenever you're going to have your next surplus somewhere in your model. And that's how you build these two things in a critical component. And that's how you decide how you're going to use your other additional sources of cash. So those were very basics on cash flow. I hope this helped you all a little bit. The intent of this exercise in the last 20 minutes or so is to allow you to be able to get just some basic knowledge of a cash flow statement. Like, what does it even mean? How do I even use it? So I hope that was accomplished. Obviously, you can get as intricate, as in-depth, and as useful as you would like to try to figure out how you want to use your cash flow projections, your 13-week cash flow, or your cash flow statements. But cash flow is exactly what will make you feel like you are in control of your business or not in control. And the one major thing that I wanted to talk about is the difference between cash flow and profit is this. Profit is the amount of money you make based off of what you bill and what your expenses are, and that's your profit. However, cash flow doesn't necessarily mean the same thing. If you invoice $200,000 and you actually had $180,000 of expenses and you made $20,000, that's your profit. That's easy. We all know that. Now, cash flow, if you had $200,000 of cash flow in to the business and $180,000 of cash flow out of the business in a specific period of time, and that generated $20,000 of cash, hopefully that shows you exactly what the difference is. You could receive this $200,000 whenever on a project, and you could spend this $180,000 across some totally different spectrum of time, and therefore your profit on the project was $20,000. But it doesn't mean that you got the $200,000 in the same time frame. If this was 1 month, it does not mean that you got the $200,000 in 1 month, spent the $180,000 in the same month, and received the $20,000 in cash in the same month, or generated $20,000 in cash. That's the biggest difference between profit and cash flow. So when you get your financials and you see that you made $20,000 that month, but then you get your cash flow statement and you see that you actually reduced your cash by $50,000, now you understand why cash flow is so important. A P&L, an income statement, you made $20,000 doesn't mean anything if you actually reduced your overall cash by $50,000. And obviously, this can flip the other way. You can have an income statement where your profit is, you actually lost $20,000, but you actually gained $50,000 in cash. They're different correlations of time. That's why they're so critical to look at. Folks, look, I hope this helped you. I hope this video was very easy to see. My goal of this was for you to understand it, make it as simple as possible for you to actually understand what can I use, how do I use it, what is the difference between cash flow and profit, what are the differences between how I figure out what my sources of cash are and my uses of cash and the relationship over time. So I hope this did that for you. We can obviously dive in much, much deeper into this, and you're more than welcome to call anyone on our mobilization funding team. If you like this video, please share it with friends, click subscribe, give us some love, call us up, let us know how we can help you. And if you need any help with cash flow statements, 13-week cash flows, or templates, resources, we have an excellent amount of them all on our website, including a free cash flow tool, all free you can use. We hope this helps you. God bless.